Yes, my name is Alex Shin. I'm one of the founding partners at Hashed. Hashed is the largest crypto assets venture capital firm accelerator out in South Korea. I'm based in San Francisco, so I have one foot in kind of fundamental technology basis, the Bay, and speculation markets. Very different.
Okay, my name is Rui Zhang. I'm the vice president of Gumi Inc., which is a public mobile game company. At the same time, I'm the managing director of Gumi Cryptos, which is a venture capital fund investing in blockchain crypto. I'm based in San Francisco too. I'm pretty close to Alex. Yeah.
You guys already know me.
Awesome. So, real quick, a question I'd love to ask is, what's your crypto origin story?
Oh, you want to go
For me? It doesn't have to go in order, but yeah, how, kind
really
of like,
quick
did
then.
you get bit by a spider and turn into Spider-Man
No,
with crypto?
no. Two things for me. 2013-ish, I was at Google. All my friends were mining Bitcoin on their work computers. I didn't have enough money to buy any. It was really confusing. And then I went to a biotech company ran by Balaji. You probably know Balaji. And it's biotech, and he's running around saying, everybody put 10% of your net worth in Bitcoin. And we're like, dude, we're in biotech. And then later, this thing took off. More recently, I'm sitting at a cafe in the Bay Area, and this is early 2017, and a lot of Bay Area VCs I know are coming to me, what's going on with crypto in Korea? A lot of my friends work at Ripple Labs. They're like, why are you people buying my coin? And I'm like, well, they're not my people, but let me go find out. And then I find out the market in Korea is just like absolutely taken off. It's just a combination of a lot of things. So I saw this rare opportunity for East Asia to be relevant in this new category. Typically frontier tech, AI, NLP, machine learning, computer vision, that kind of stuff. We just don't really have a lot of data sets to build and compete. Yeah, but I think like a digital native medium made a lot of sense. So yeah, I jumped in full force, put 98% of my net worth in crypto because you have to be incentivized. And I've been running a fund with my friends.
Awesome. So with your friend, I go on that. You just buddies from
yeah,
back in the day. And
yeah, these are my buddies that used to crash at my house before they were crypto bajillionaires. And then when they all made a lot of money, everybody's like still fairly frugal. We're all startup entrepreneurs. We're not venture capitalists or hedge fund guys. So with all this money, we just pooled the capital together to create a venture fund because we just thought it was a rare opportunity for us to build some relevance. Yeah. Back then, it was just speculation. So we're like, we need good founders. We need developer ecosystems. So we incubated a lot of the early projects out of Korea.
Yeah, it kind of sounds like a remake of Entourage or something.
Yeah, we're very crypto native, and we're struggling to stay relevant as it's become more of a venture market, right? But we're learning. Yeah.
How about you, Ray?
My story is more about from the comfort side. So Gumi, as a mobile gaming company, but we actually have a venture arm investing in different new technologies since the past. And in the past, we invest in mobile-related technologies, AI, IoT, and later VR, AR. And when 2017, everything in the blockchain crypto market, it becomes so super heat, and you just cannot ignore it anymore. And we want to think about how, and as a corporation, we can adapt blockchain technology, how that disruptive technology will be able to change our daily business, and whether we can utilize it to actually to make us become capable to compete with even bigger giant companies. That's a start. And usually when we starting to enter into a new technology, we're starting from an investment. We want to, especially we invest in the early stage, we want to help those entrepreneurs to grow the whole industry, and then find a way that Gumi could collaborate with them, how we can help them, and on the other side, how we can learn from them. That's the start.
Satoshi sent me no, I'm kidding. I started mining initially, so very familiar with the data center business, and mining just made a lot of sense because it was very obvious it's going to be much more profitable than traditional data centers. And I am forever grateful that I started doing that first, because it led me to have to understand kind of all the core components of wallets, exchanges, kind of all that stuff. And it probably also was the #1 reason why I sidestepped a lot of the ICO mania.
So the session is called Venture Capital Outlook on Blockchain. I'm curious, either your own outlook, or what would be the best way to describe how, one of you three might look at blockchain or crypto, for that matter, versus a traditional investor.
Okay, I'll take this one. For the most part, Bay Area is doing the Bay Area thing. Like every venture shop's got a crypto arm or a crypto dude or something, and it's definitely in a lot of ways over allocated, right? There's a lot of really cool technology out there, like just from a pure cryptography standpoint to a lot of these coordination efforts that we're seeing. Is it investable? That's a big different question. Where is value being captured? That's a whole different question. For us, I'm realizing these markets in Asia and the Bay are going to move very, very differently, right?
Touch on that. Like, what is the difference between Asia and the Bay?
Imagine if 30-40% of white-collar Americans are trading crypto today. Like, New York and San Francisco would look very different. That's like Korea in a very contained environment. There's really specific experiments we can run there that you just can't run here, right? Like consumer adoption. Like, yeah, we might be able to get a couple million people to try something because 40% of the population's in one city. They all speak the same language. They all know what crypto is. So those are the bets we're making there. They don't care about centralization, decentralization.
Adoption in Asia obviously is higher here, right?
Yeah, but they just like over here we're very like it must be decentralized consensus, but over there it's like, nah, we just want utility. We want to do something. We want to speculate on and make some stuff happen. So those are the bets we're making. In the Bay, we're looking at a lot of the infrastructure type stuff that's going to enable that. Is there, I think, Pomp, you wrote this somewhere, like airplane arbitrage opportunity? Maybe. So we're making some bets on that angle as well.
Awesome.
Well, I think the difference between the traditional, the question is between the traditional VC venture capital investment and blockchain. Actually, my opinion is that will actually no fundamental difference because as an investor, what you invest is the team, the technology, the future of something new. And what you're betting on is the capability of a team to execute a good concept, solving a real problem on the outside the market. And on that side, then I would say it's all the same. The difference is in the past that the investor, the origin of the investors on the market is different. I think especially in 2017 when a lot of people earn a lot of money through just by trading Bitcoin or Ethereum since the beginning, then they actually suddenly have become very wealthy. They don't know how to spend it. Now they become an investor. But those guys don't really know what technology is, what kind of technology what kind of person can utilize it, what kind of problem they can solve it. So they're starting to invest, and suddenly they're starting to lose money. They starting to crash the whole market because they have a really, really negative mood on the market. But now, since the late of last year, the whole market go back to the traditional venture capital side. So it's more reasonable, logical thought investors come into the market, supporting the entrepreneurs. They'll come back to the origin, the natural origin of the venture capitals. I think that's the change I saw.
Yeah, so maybe the philosophies are the same as far as picking a deal, but it's what you think about the technology overall, right? Or no?
Talking about technology offers.
Sorry, I guess more about the opportunity, right? So like the diligence, all that remains the same, right?
Yeah.
It's just more of like your appetite to invest in that type of.
Yes.
Yeah.
So I just look at what the previous returns were, right? A lot of people talk about the price appreciation of, take Bitcoin for example. If you had invested in the seed or Series A of Kraken, Binance, Bitmain, Coinbase, etc., and on the same date you bought Bitcoin, your equity investment in those companies would have outperformed the price appreciation of Bitcoin. Right, so actually, you would have made more money investing in the equity of the business than speculating on the price of Bitcoin. And additionally, if you look at the downside risk, you're owning a business that has cash flows and some of them profitability versus speculation. And so we really think about it as you should have a little bit of both. But the way our fund is structured, up to 15% is liquid, and then 85% is direct investing. And we really are looking for kind of 1000x type returns. Right? We want to see companies that define categories become some of the largest companies in the world. And in order to do that, you've got to be able to put significant capital to work to really monetize a large fund. But the other side of that is if you think of Bitcoin today at a $70 billion market cap, give or take, and let's say that on the high end, people in this room, the general consensus would be the absolute uppermost limit over the next 10 years is there's 100x left, right? So there's kind of in the next bull run, it could go up 100x. Well, if I'm making investments in a company in the seed round and it becomes the next Uber, I'd be pissed if it was only 100x. Right, I actually want it to be 1,000 plus x, and so the thought process there is Bitcoin specifically 100x sounds really big, except for if you look at the returns that can be generated by investing in the seed round of a multi-billion-dollar company. And so I really just go back to those returns. Where are you going to make more money, and what's kind of the better risk-adjusted investment outside of maybe 1 to 5 of the top liquid cryptos? We actually think the best risk-adjusted investments are in the equity side, and so that's where we focus almost all of our attention, invest all of the capital.
Do you guys do SAFs? Sometimes out of that 85%?
We have done them, but they are usually in situations where we write very small checks, and also we make sure that we put some provisions in that I don't want your fucking tokens.
Why don't you want the fucking tokens?
Super experimental, right?
Yeah, again, you've got to remember, our approach and who our LPs are. So the idea that I'm going to invest in this thing that may go up in value sounds great, right? I always give entrepreneurs this framework. Like, crypto investors ask, how high can something go? What's the absolute upside return? Like, professional capital allocators ask, how much can we lose? Right? So one side's looking at the upside, the other side immediately goes to the downside. With equity, what is the downside? We could go to zero, but if we're investing in businesses that have assets, et cetera, if there's liquidation preferences, right? If there's all this stuff, there's kind of mitigated downside risk, right? Still downside, but it's mitigated. With tokens, there's none of that. And so it's just purely, it can go 100x or it could go to zero very quickly. And so in a lot of situations, that's one thing that scares us. And then the second is the governance rights, right? The kind of ownership and governance, there is essentially none, right? So if you own a token today, what can you do in terms of helping that team from a legal standpoint actually improve or drive value? Nothing. But pray, right? That's all you can do.
Yeah, I mean, there's some projects that, they're not scams. They're just so crypto native. Mm-hmm. They donated all the money that they raised. They're airdropping 80%. The company, there's no company. The physical company's gone.
Somebody one time told me, you have to remember that some of the most influential people in this space were doing this in 2010, 2011, right. And you got to be kind of crazy to do that, right? And they would rather tank everything in order to uphold the ethos rather than make money. And so let's just hold that as a true statement, right? We can debate whether it's not, but let's just say that's true. That's a very irrational thing to most capital market investors, right? The idea that capitalism and that kind of rational thought of profit wouldn't prevail. I think that scares people, right?
In touching a little bit more on this is we're talking about more from a hedge fund perspective, more from an investments perspective. For those in the room, right, a lot of times people think there's an attachment between crypto and blockchain, and there is. Obviously, what I always say is that it's a symbiotic relationship, right? Not synonymous, they're not the same, but they're symbiotic together. So in touching on that symbiotic relationship, how might one look at investing in a crypto fund versus a blockchain fund, and why would you do one or the other, or is crypto fund just not the thing anymore?
Well, at least our fund is a US dollar dominated fund. We don't accept the original LP capital. We don't accept any cryptos because we are doing a venture investment and we don't want to afford the risk of on the capital side too. But talking about investment, actually, I have a question. So when you invest in the equity, you actually expect there's a value actually flow into the company so that the value of the company going up. But when you invest in tokens, actually you expect the economy of token is different because it depends on the demand and supply. There's no fundamental benefit for holding the shares of a blockchain, right?
Yeah, one of the things, this is the best example I can think of. So EOS is one of the top 10 tokens at this point. And for those that don't know, they basically sold tokens as part of a fundraise over a year. So they said every day we're going to sell X number of tokens for 12 months, right? They raised $12 billion. And every time somebody tells me that $4 billion. And every time they say that, 12 months, $4 billion, right? But every time somebody says that to me, I always say, whoa, time out. It wasn't a fundraise because what they did was they sold tokens and they booked it all as revenue. If you bought the tokens, you don't own anything, There's no equity. You're just holding this token that may or may not go up in value. And so there's two arguments there. One is, do investors know what they're buying, right? Well, they get a document, they've got to sign it, they're supposed to read it, whether they do or not is on them, right? So there's kind of disclosures, et cetera. And when you read the disclosures, they're pretty damn transparent, saying, this is not equity, you do not own it. I mean, right? So it's pretty transparent. The other side of it, though, is that a new business model? Right? Imagine that Block One business that was selling these tokens. They just booked $4 billion of revenue. How many companies in the world did $4 billion in revenue last year? Not that many, right? And so there's kind of this, it's like a fine line, right? Like, what is, to your point, like, what is the scam versus are we just seeing people push the kind of line of innovation or the envelope, and actually what we're going to see is a couple of projects break through and build something new, right?
So, I mean, yeah, it's because, again, I'm kind of cross borders here, right? I mean, South Korea, with the penetration that we have today, crypto assets, it's still not an asset class. There's no tax for Bitcoin. That's why I'm really poor here. But I was talking to like Novogratz, for example, and he's an equity holder in Block One. I think that's public. So he's really happy about that investment. At one point, we were the largest holder of EOS in South Korea. And our return was we stake it and we get transaction fees. That is a fundamentally new business, right? Now we don't have any governance rights, so that's really awkward, right? When there's
Real quick, can you touch on what that means for everybody when you said you stake it?
Yeah, so EOS is a delegated proof of stake kind of mechanism. So it's POS, proof of stake. A bunch of people with EOS get together. We pick kind of people who are like big champions for EOS. They really like that. And then everybody with a lot of EOS get together and they support this one person. It's kind of like the government system. So there's 21 nodes out there. Unfortunately, most of them are in China, right? And people are building on this network, and the fees from those transactions get divvied out to people who are staking it. So that was a viable business model. At one point, we were clearing a couple $1 million a month, right? So I was like, oh, this is interesting, right? And if the network grows, the value of the coins grow as well in conjunction, right? So it is a new model. Has it really been proven out? I don't know. Is it mostly experimental? I would say so. Unlike Pomp, we're very far from institutional capital. We're personal capital, right? So we lost a ton of money in 2018, but it's just our money. No one's mad at us. But now that we're thinking about raising outside capital, because we see this very venture game, like the fundamental shift is so different. We're not quite sure how to do it, right? So we're in the midst of figuring that out as well.
I would say, so the tokens, as you mentioned, EOS, it could be a scam someday. It could be a real decent project in the future. It wholly depends on whether that platform becomes really a usage platform. There's a lot of services built on top of it, and all the users who hold the tokens really have a meaningful usage in that. And you have to spend it, otherwise you cannot accept service. It's just like when you go to a casino, you have the chips, and if you hold the chips and you can use it to bet a lot of things, have fun, that's a valuable thing for you. And if there's only a limited coins for you, and there's only a limited seats you can see there, then that becomes a valuable asset for you. I think that's why, as you mentioned, those platforms, infrastructure platforms, they keep granting money to the outside, giving to all the developers because they want to make themselves useful, right?
This is the part that to me makes crypto so exciting, right? What you're hearing is multiple stages of the ecosystem or the value chain. Everyone is trying new things. So if you take EOS, right, and to be clear, I don't think anyone here is accusing EOS of being a scam, but the reason why people are questioning what's going on is the way that the tokens are created, right? So they sold equity in a for-profit business, and then they created tokens that are outside of that, right? They then sold those tokens. Then the people who bought the tokens can hold them, and there can be appreciation, or they can hold them, stake them, get interest, if you will, right, or transaction fees. And so each person in this chain of the business that's in and around the ecosystem is getting the opportunity to do some traditional things. So you can just invest, right? But then they also get some new aspects where do we hold it? Do we stake it? Do we hold it? It goes up in value. Maybe we sell some and take money off the table, right? There's just a much more complex system here. And the part that to me is so exciting is like, we're going to 10 years from now look back and say, hey, some of this stuff people made really good decisions. Some of this stuff people made bad decisions. And for the people who are doing a lot of investing, I think they're probably going to have wins and losses on their track record. And so we just got to figure it out as a ecosystem.
Just last comment on that. A really good framework to look at this is think of all these crypto type native stuff as really novel forms of coordination. Like Bitcoin as a form of coordination is just moving value over to over, right? Ethereum is, maybe they're trying to be like sovereign commodity money at some point, but it's just they're trying. I mean, not. There's a whole movement on DeFi that's going on. That's a whole different bag of worms. So people are building banking that's like unstoppable, right? It's a little bit crazy, right? But again, it's crypto to crypto. So these are really interesting movements that might be a 10-year horizon, might not be really investable at the moment, but interesting movements that you guys could look at.
Going off of this, one part to me that's just fascinating, right, is how many people here understand how banking works generally, right? Pretty much everybody in the room. How many of you understand that on the internet you can type in a URL and you can visit a web page when you type in the URL, right? Pretty much everybody in the room. Now, you also understand that the bank can freeze your assets, not allow you to send money somewhere. It can prevent you from accepting things, because you're trying to do something illegal. There's sanctions, there's all this kind of stuff, right? Also, we understand that, let's say that there's websites that are blocked in China or other geographic regions. Well, a lot of the technology that's being built right now, right, if you take something like Handshake, they're actually building a URL system, right, a domain system that can't be blocked. It's decentralized. There's no way to block it. Well, that sounds pretty cool. But actually, that may be pretty dangerous. We kind of don't know yet, right? So it's kind of with great responsibility, with great power comes great responsibility. Well, that's just URLs. So it's the access to information, the ability to read stuff, right? Well, what if we take that same inability to stop something or shut it down and bring it to the banking system? Ooh, well, that's pretty weird too, right? And what are the benefits and what are the downsides to it? And so I think that there's a lot of kind of different ways to look at this stuff. We probably spend much more time thinking about the technical capabilities, the teams, if we give you money, how do we monetize that investment, make a return? But there's also questions around the ethics of some of this stuff and how government.
Yeah. So, well, it might be an I don't know, but with this next question I'm going to ask you is, we talk a lot about like what does it take to get mass adoption, right? So I'd love to hear what's the perspective of a VC in the what does it take to get mass adoption for a company that you might be interested in investing in or an industry.
Time. It just takes time.
Do you want to talk about Facebook coin or not? No.
Yeah, let's go.
Should we not go there? So a high level
you can
thesis.
throw JPM in there too if you want.
JPMC, trying to put like a layer of new money on top of USC, kind of scary, Jamie. Let's see. Messaging apps are inherently incredibly hard to monetize, except you have government backing like WeChat, right? So every messaging app that's not a WeChat is trying to do crypto something, right? We got Line, Kakao in Asia. We got WhatsApp in India with Facebook pushing that. We got Signal, Telegram, all this good jazz. Kick. So either you print your own money, right? Like it's stable backed by fiat or something, or like you try to build smart contract platforms. They're all geared to like start launching, I guess, this month towards the end of the year. It'll be really interesting to see what happens when you flip on these networks, because Bitcoin has like 50 million wallets, give or take, right? I have like 20 Bitcoin wallets, so I'm sure it's a lot less than 50. And South Korea, like Kakao has 50 million users. Like these people don't need to know what crypto is. You just sprinkle a bunch on them and see what happens. Are they gonna sell it, stake it, trickle? Like someone's got to do that experiment for us to know. Like Line's doing this. They have 216 million users. Telegram's coming out pretty soon. So I think this could be a really interesting paradigm shift. It could totally fail, but everybody learns from that. And that's one of the most exciting things I have going on.
Yeah, I talk a lot about Facebook is definitely the most important company in crypto, not because, you don't have to believe that they're going to be the most successful. You don't have to believe that what they're building makes sense, but you have to understand that, let's say that all in, we'll be very generous and say 100 million people on the planet have interacted with cryptocurrency to date, right? 100 million people out of 7 billion plus. Facebook turns on a test. They literally just say, hey, we're just going to test it in one country. They'll hit more than 100 million people, right? So whatever they launch, good, bad, indifferent, is going to be the first way that a very large number of people get onboarded onto crypto. It's going to be their first experience. And so actually that becomes really important what that is, right? Is it secure? Does it have the same ethos around privacy and things, right? How do they interact with it? Do they know that it's crypto or blockchain based, or are they just using something that looks like, AWS credits and they don't even understand the underlying technology? Like these are the things that really drive true adoption. And I agree that, in traditional finance, a lot of people think like you build it and they will come, right? Hey, I started a fund, everyone's going to give me money. Well, what you learn as an investor is like distribution is king, right? The more distribution you have, the more power you have to raise capital, to find deals, etc. We're about to see in crypto the distribution is king. You can build the coolest technology in the world, but if you can't get people to use it, it doesn't matter. And these companies are coming at it from distribution first, where they've already got the distribution and now they're going to introduce the technology.
Yeah.
So everybody's talking about the end users doesn't have to know what is blockchain. It doesn't even need to know whether this application or the service that they're accepting is built on top of blockchain. So I think first someday when people stop talking about blockchain, no, this worse. I think that's the time the option will be, because when you're currently using browser or any application now, you're not talking about TCP/IP, FTP, or whatever the protocol. You never mention that. And another thing is, I think since people don't need to, and everybody say that the end user doesn't need to know what is blockchain, whether it's built on blockchain. That means they don't really care about whether it's decentralized or not, right? Because if they care about it, you should tell them it's built on blockchain. So my comment here is that the real adoption is first someone uses technology and just on the back end and doesn't make this current service much better than the original one, or there's companies who build a service that it has to be on blockchain. Otherwise, you cannot accept you cannot have the same features or same functions. Then people will have to use it. So
just echoing on that, because I totally agree, but the framework I use is the only feature of blockchain is trust. There's no reason why you would use a distributed system that's like doesn't scale. It's crazy expensive. But if you think about trust, like I met a non-crypto friend first time in a long time, and they thought I was crazy, right? So if you go to Japan, for example, and you go up to them and be like, hey, yo, there's a Line wallet and an Ethereum wallet, they're probably going to trust Line wallet on any given day, right? And there's like 300 million people there, right? So we got to really think about what trust actually means. Does it come from consensus? Does it come from brands, et cetera? No one knows yet. But I think we're about to figure that out pretty soon.
Yeah, I like what you're saying about Facebook is what's interesting to me is frankly that whether it's decentralized, centralized, what have you, from a mass adoption standpoint, it's just a good example for any other company, right? It's like, hey, that Facebook coin is doing something. Maybe now a Zillow starts thinking about it. Or
I'm calling it now. I think Facebook is going to surprise all of us, and it's going to be much more decentralized. It's going to be much more thoughtful, and end up being much more important than people are giving it credit for.
Yeah.
It's easy right now to kind of chirp and say, oh, well, IBM tried, JP Morgan's trying, right, all this stuff. Well, we have to remember, and by the way, I worked at the company, so I'm incredibly biased, and I recognize that, but these are some of the most ruthless operators that we have in our lifetime, right? They have built a product that has over 2 billion people using it every single month. We had, when I was at the company, had gotten so many people onto the service around the world, we were running out of people that were connected to the internet. And so then they started internet.org to go get more people on the internet to then get them on Facebook. Think about that, right? That's the saturation they had globally. And so we're talking about people who just understand humans, technology, social networks, et cetera, better than anyone else.
Definitely.
I tend to think that they've got a pretty good shot of building something pretty powerful.
Yeah. So we were having such great conversation that we unfortunately don't have time for questions, but they're going to be here for a little bit, and so I recommend that you come up to them and ask them a question. But while we transition to the next session, do one of you have a question you want to pose to the audience?
What's the number one way that Bitcoin fails?